Good morning, welcome to the market view for Wednesday the 23rd of July 2014. Starting off with the 30-minute chart, we can see that we had a few signals yesterday. Starting off with a potential buy which wasn't filled. Then we had a sell signal that appeared on the chart just at 2:30, the market moving lower for the next hour and actually filling the trade. However, the market found support at the previous day's low and also the support one area which you can see there, and also of course the psychological level of 170.50, so major support in this area. So we see the buying coming back into the market here. The next bar is a red bar, so we're expecting the market to try and move low, but you can see again it trades through the 170.50, comes back off the lows, and then the same here. So after about the third attempt of going through, you would want to consider mitigating some of the potential loss, and this way, instead of having a risk of 25 points, you could reduce it down to 7 pips for this market, because it isn't taking out this major support area. And there we see the market thereafter moving back to the upside. So another very narrow trading range yesterday for the British pound. If we just have a quick look and see what it is, this is the high for the day. We see the low for the day here. A total of 41 pips. So again, a very quiet day. And of course, this is reflected within the daily chart. There you can see a very quiet day, trading between the 50 pip range once more. And this morning we see the market sideways to higher. We've got this market is trading sideways because if we use the fib retracement, look to the left, the next low to the left is this bar, and if we use this and draw up to the previous high, which is this bar, you can see there 76% the market's finding support at this 170.50 area there. So that's the current state of why the market's finding support in this area, and just trading sideways. There's not a lot, as I say, it sounds like a broken record, but there's not a lot we can actually do as far as this market's concerned. It's just stuck in this sort of 100 pip range, and more so over the last 2 days, just a 40 pip range there. So again, very quiet indeed. Hopefully today we've got quite a bit of news to shake up the market. We've got asset purchase facility at 9:30, official bank rate votes out at 9:30 as well, which will be unchanged. That really won't make a fat lot of difference to the market, but what certainly will is Carney speaking at 12:45. So it'll be interesting to see what his take is, especially as the borrowing figures went up again yesterday and Osborne's 5-year plan has gone out the window. But there's no surprise there really, because it's now costing the UK taxpayer 200 million, that's right, 200 million pounds per day in interest on the debt. That's 1 billion per week, which has been reached. I've discussed this before. So no surprise really that Osborne can't make the books balance. It's an impossible task for anybody. It doesn't matter what colour the party is. And this is what's behind all of the problems and future problems we're going to see as well, is that behind whether it's public sector pensions or anything else, or state pensions or whatever it's going to be, or anything that's funded by the government, is going to pose a real problem, because the government cannot pay off the debt when the GDP ratio is 77% of debt to GDP. You cannot pay off the debt with 33% of income. It is as simple as that. So on that cheery note, let's move on and take a look at the Dow. And you can see here we've got the market trading high yesterday. It opened and traded lower and then turned around and moved back to the upside. We're through the 76% retracement. Let's see what happens at this recent high. It's another all-time high. In the short term, I can't see this market coming down, especially what happened last week. It's the only game in town at the moment. Even though the implied volatility is rocking along on the lows, which we'll look at in just a moment. At the moment, it would appear that the Federal Reserve doesn't want this market to go down. You can see anytime it has moved down recently, they've just brought it back, and that's what we're seeing here, even with the appalling situation of last week, which could have been a catalyst to move the market lower. It reversed the following day, even on fresh air, and the market's moving back to the upside. So in the short term, I would, unless something, really like a banking crisis comes out of nowhere, then expect this market to remain sideways to higher, making new all-time highs at the moment. If we look at the implied volatility, this moved slightly lower yesterday, down 903, 7.2 for the historic, which is not too much different from the day before, in fact slightly higher. So we've got a situation here where the implied is moving back to the downside, as well as the market settles into this sort of sideways trading pattern there. Well, that's really it for this morning. There's not a lot else I can really say. Just watch out for what Carney's got to say at 12:45. And all things being equal, I will see you in tomorrow's market view. Have a great day. Enjoy the sunshine. It's spectacular weather at the moment here in the UK. And as ever, thanks for your support and also for watching.